lot of people are having this kind of doom and gloom viewpoint of where our economic future is looking. I guess, what do you guys on the lending side see going on right now?
So I was actually reading a really interesting economic forecast on Monday. Freddie Mac released on Monday essentially that they feel like the bulk of the economic damage that we're going to see from this virus is going to be contained within the first half of this year. And so they're saying that they expect by the third quarter, which is right around the corner, that we're going to be seeing economic relief and going to be on a road to recovery already, which is really, really exciting, especially from the lending world. And then they actually went on to say that they feel like a lot of the fiscal stimulus that's being provided by the CARES Act is actually going to mute the impact on our housing market and on housing prices. And so I think that's really, really exciting news, because essentially they're predicting that after the next 4 quarters, that housing prices should continue to appreciate 2 to 3%, which is what's typical for a very healthy market.
Mm-hmm. That's fantastic news.
Yeah.
Because I think a lot of people have this idea that they're going to be in this situation similar to 2008 when our bubble burst, and that their property values are going to go into the toilet, and they're not going to be able to sell, and they're going to be losing all this money.
Right.
But it sounds like the forecast is that that's not what we're facing right now.
Yeah.
In theory.
I feel like a lot of people get wrapped up in a lot of things that they hear. And truthfully, I mean, there's a big difference between like a financial crisis. And if you look at what happened in the 2008, 9, 10 like era, it was a financial crisis that we were seeing. And recently, up through January, when all of this hit our shores, we were in an extremely strong economy, like a great economic position. And the stock market had been on its single longest bull market run in history, right? And then in January of this year, they were looking at delinquency rates within the mortgage community, and we were right near our 20-year lows. So that to me says that those are signs of a super healthy economic system and a great market. I feel like just as quickly as this came on, we're gonna rebound. Like, I really do feel like we're going to see, great recovery, and hopefully very quickly. I think that, it'll take a little bit of time, but not nearly as much as what we've seen in the past.
Yeah, because I mean, we were just in some markets just getting to the point where we were balancing out where we were at 2008. So it would be really unfortunate if we were to get down to that or even below it. So it sounds like we're in a pretty good spot. So
yeah,
not too much to worry about.
Exactly. I don't think it's nearly as bad. I mean, obviously we don't know. We've never been in this position before, right? And there's a lot of fear behind the unknown. But that being said, I mean, the data that I'm seeing it's all positive. I mean, maybe some short-term pain, but there's going to be long-term gain.
That's pretty exciting. I mean, it's always exciting to jump into the unknown. So
yeah.
To quote Elsa in Frozen 2.
I was just going to start singing it.
Well, I mean, you got to spend some time during quarantine doing something. So may as well be on Disney Plus.
Exactly.
Right on. Well, hey, Kristen, thank you so much for spending some time with me today. And I really appreciate all your information.
Oh, no problem at all. It's so amazing to get to talk to you. I really appreciate your friendship, and just getting to work with you guys. You guys are amazing, and Madden's incredible. I love you guys.
Well, thanks.
Yeah, no problem.
Take care.
Bye.